Hello and good morning, folks. This is Almus Market Mornings with Shikhar Garg, your daily dose of global financial update. And what a week it has been. The rupee bulls have taken charge way too strong, bringing in USD INR down to 78.50 as the low, only to see it close around 78.71. Now, there are a lot of developments that we have been tracking, along with the kind of change in the shift or change in the geopolitical zones of tension from the Russia or Ukraine or probably let's say Europe to now back again with US and China. But that's not the only thing being tracked, folks. The flight of Nancy Pelosi to Taiwan was one of the most tracked flights on the radar 24. So I don't know what's going on with geopolitics, but there are a lot of things being tracked by a lot of folks. But apart from that, we've seen an increase in trade deficit and everything. So Pankaj would like to hear from you. What are the kind of updates that we should be tracking on the financial market front?
Good morning, everyone. Financial market is also a kind of at this point of a time following geopolitical. They are not much worried because markets believe that it's going to be a war of words between US and China. At the same point of time, US House Speaker Nancy Pelosi, who is among the senior most ranking American politician, she has visited Taiwan. She is visiting already reached Taiwan. And that has happened after 25 years. In 1997, similar rank official also visited Taiwan. And China doesn't like this. So China has actually put up a statement saying that they will retaliate with the economic retaliations. And maybe they have also started doing provocative drills, military drills near Taiwan Straits. So this is war of words as of look like, but not all is not good. If you look at the financial market, where the Jerome Powell on a Fed meeting has basically kind of put up a statement that we are reaching around neutral rates. The 3-4 Fed members yesterday has kind of a statement which are put in that said we are not nearby that. What they have said that Bullard specifically said that US Fed has a credibility to raise rates. We are not like 1970s. Where we were not able to raise rates, and we will be raising rates and doing a soft lending rather than a hard lending. The other, like Mary Daly, Chris Evans, everybody has put in the statement that we will be raising rates to fight inflation. It might not be front loaded, but we are far from there. And all these led to increasing probability of 75 basis rate hike in the August meeting. As of now, the 75 basis rate hike probability is 40%, but it has gone as down as 30% previous week. Looking at these statements, financial markets got uncomfortable. They sold off treasuries. 2-year treasury yield moved higher than the FOMC Fed speech day. It's back above 3%, and 10-year treasuries at 272. So inverted yield curve is still continuing. The gap between two is 30 basis. Statements favored also dollar. Dollar index has moved up by 1% to 106.20. Euro is not able to cross a very important level of 1.0284. On a downside, it's getting support around 1.0120 to 1.0150. It will be interesting to watch whether it dips below 1.0120. Coming back to ECB, the latest data shows that in the last 2 months, ECB has increased purchases of debt from Italy, Spain, Portugal, and Greece around 17.3 billion euros, whereas at the same point of time, they have reduced the holding of German, French, and Dutch bond by 18.9 billion euros. That shows that they promise that how they will be protecting the periphery yields. It came into, it just got reaffirmed in the data which has got released yesterday. India, coming back to India trade deficit widened to all-time high of USD 31 billion, and that's a huge number. If you look at the FX reserves, which is around 570 billion, 31 billion of a trade deficit is a very strong number. but none of the economists will revise these trade deficit and CAD numbers higher, because they just significant amount of a correction happened in commodities during the month of July, and the impact will be realized in coming months. Looking at the breakup of a trade deficit number, the imports month over month had stayed at the same numbers, whereas the exports have declined by 12%, export numbers month on month. So there's a two factors. It looks like global economy also slowing down. Second, the windfall tax which have been imposed in Indian refiners, that has also led to some contraction in the export numbers. Yesterday, dollar rupee had a very interesting move. It opened at 78.95 and then suddenly dropped to 78.50 on a rumors that they have got a $1.1 billion inflow of a Yes Bank holding. The rumors were there. It might not have hit the market, but markets would be getting a position for that. But definitely some corporate long positions have been cut at the break of 78.85, and that's led to a as good as 78.50. RBI got seen at 78.50 and market closed at 78.71. INR 10-year GSEC yield also fell by 5 basis points to 7.19, mirroring to a move in US yields on Monday. Today it's likely to go back to 7.25 since US yields have also moved higher. RBI MPC decision on Friday, that will be the most watched event in the next 3 days in Indian markets. Whereas the broad market expectations that they would be raising minimum 35 basis point, I assume that they will be raising closer to 50 basis point to 540, and that gives a kind of basically a validation from my side that the previous month we have seen around 14,000 to 15,000 crores of a bond inflow, and that numbers at a higher yields, we are seeing FIIs investors are getting interested, and Indian in the current account deficit and the trade deficit, India would like to attract flows for Indian economy, and that might lead to maybe a slightly higher interest rates. That's all from me. Thank you. Thanks a lot.
Okay, that was quite interesting, Pankaj, and I really like the fact that you mentioned currently the geopolitical space is in war of words more than actual war which is being considered across. So quite an interesting statement to make. At the same time, there are two expectations on rate hikes that you've mentioned in your commentary. I can reiterate for the folks listening. The market has started increasing the probability on the rate hike by 75 basis point by the US Central Bank, whereas our central bank, RBI, is going to announce their decision this Friday with a probability that the market participants are expecting is of 35 basis rate hike, whereas as Pankaj mentioned, there is a good possibility of a 50 basis hike in the interest rates by our central bank. Though there was very good thing, I don't know many noticed or not, the liquidity has been shrunk quite well by the central bank. So by far the central bank has done quite well in managing the inflation, whereas another positive that we are seeing is some positive flows by the foreign investors. So we'll see how things go ahead in the financial markets and keep bringing you fresh updates. Till then, thank you for listening, folks.